we have this Sino-US tension, which is actually the major overhang. And of course, we are looking at how the world recovers from COVID-19. In the case of China, the news has been more positive than I had expected. As recently as early April, I thought China can only look forward to a U-shaped recovery of sorts. But in fact, I was too pessimistic. China is decisively moving into positive growth territory. It's a V-shaped recovery. Overall, China's growth this year should come in at about 2%, I estimate. In fact, just so you know, the world's best performing major market this year, in fact, is China. The Shanghai Composite CSI 300 index already year to date is in positive territory ever since the announcement of the national securities legislation. The level of protest action, even the efforts to hold a strike by protesters have failed. They are not able to gather the sufficient support from the public to make it happen. On the contrary, the Hong Kong stock market continues to go up. I think today the Hang Seng Index is up another roughly 1% after Mr. Trump came out with a fully intact trade deal statement. The market is looking past the legislation. The market basically seems to feel that the legislation have advantages and disadvantages, but basically it allows Hong Kong to leave behind a very contentious issue, which is the Hong Kong's obligation under one country, two systems to implement some sort of a national security law. Hong Kong had 23 years to do it. It was part of the deal signed between Britain and Beijing on Hong Kong's future. It never managed to happen. So now Beijing is imposing a version of it on Hong Kong after waiting for 23 years for Hong Kong to do something. So, but my point is, I think we have to move on and focus on the very real issues dividing Hong Kong society and denying young Hong Kong people access to economic and social opportunities. That is the real issue.